Good afternoon, everyone. Thanks a lot for joining in on this watch list by Magenta Trade. Today is a Friday, 24th of June. Good afternoon once again and welcome. We are back to our regular YouTube live program, the watch list, to monitor the stocks in this post-lunch session. At Magenta Trade, we teach you how to grow your portfolio using option trading strategies. We explain in simple terms how you can participate in the world-leading companies with a fraction of the amount that you would need as normal investment. In the vast ocean of stock market, there are plenty of opportunities to gain from the movement of share prices every day. However, market is unpredictable, volatile, and sometimes complex to understand. In order to be successful, you need a disciplined, rule-based approach developed over a long period of experience in the market and focused on building a long-term portfolio to protect your hard-earned money. With that introduction, let's get started with today's session. And first, I'd like to show the disclosure, but before that, I need to share my screen with you. So quickly, just give me a second. Okay, hopefully you are able to see my screen now. And there it is. All our discussions at Magenta Trade are solely for educational and information purposes. We are not investment advisors, and you should consult a financial advisor before making any investments. Options trading involve exceptional gains, but at the same time, they pose inherent risk. Past results are no guarantee of future gains. For more disclosures, you can visit our website, www.magentatrade.com. Let's quickly have a look at some of the earnings numbers that we have today. Quickly. We have Carmax today, and Carmax reported first quarter May 2022 earnings of $1.56 per share on revenue of $9.3 billion, whereas the expectation was earnings per share of $1.51 per share on revenue of $9.2 billion. So there is better than expected results, and revenue grew 21% year on year. The stock is currently up by more than 5.8%. Carmax, together with its wholly owned subsidiaries, is engaged in sales of used vehicles in the United States. As you know, the price of the used cars have gone up significantly in the last 12 months because of the supply chain issues all over the world. That's in general trend that has probably helped Carmax, in a better sales and better profitability as well. Net revenues of 9.3 billion, up 21% compared to the prior year. First quarter sold 427,257 units through the combined retail and wholesale channels, down 5.5% versus prior year first quarter. Retail used units sales declined 11% to 240,950 vehicles, and comparable store used unit sales declined 12.7%. So the sales have in fact declined here in both these segments. Bought 362,280 vehicles from consumers and dealers, up 6.2% versus last year's first quarter. 345,216 of these vehicles were from consumers, up 3% over last year's record results. Well, these were the sales were good this year, but they were probably better in the previous year. So that's why there's a little bit of downside in the sales, but probably better than what the market expected. Gross profit per retail used unit of $2,339, an increase of $134 versus the prior year's first quarter. Gross profit per wholesale unit of $1,029, consistent with last year's first quarter. Okay. Some other numbers the CEO mentioned. While the used vehicle market environment was challenging in the first quarter, we continue to make progress on the key strategic priorities that enable Carmax to grow profitable market share now and into the future. For the past several years, our priorities and investments have focused on building a leading e-commerce platform that integrates buying and selling cars with our best-in-class store experience. All of our retail customers are now able to transact online on their own. We'll now turn our efforts to further improving the experience for customers and associates by focusing on the seamlessness of our online and in-store offerings. Okay. Let's look at another result now. Quickly. Carnival Corporation. Carnival reported a second quarter May 2022 loss of $1.64 on revenue of $2.4 billion. Expectation was $1.14 per share on revenue of $2.6 billion. Even though the earnings per share was less than the market expectation, but still the forecast is better, and the revenue grew 4,700% on year-on-year basis. The company said it expects to report a loss for the third quarter as well. However, let's see the forecast in detail maybe later. Carnival provides a second quarter 2022 business update with a loss of $1.9 million for the second quarter of 2022. Cash from operations turned positive in the second quarter of 2022. Second quarter 2022 ended with $7.5 billion liquidity, including cash, short-term investment, and borrowings available under the company's revolving credit facility. Revenue increased by nearly 50% in the second quarter of 2022 compared to first quarter of 2022. For the cruise segment, revenue per passenger cruise stay for the second quarter of 2022 decreased slightly compared to a strong 2019. Occupancy in the second quarter of 2022 was 69% and increased from 54% in the prior quarter. And customer deposits increased $1.4 billion to $5.1 billion as of 31st of May 2022, from $3.7 billion as of February 28, 2022. So these are quarter-on-quarter figures. And as of June 24, 2022, 91% of the company's capacity is in guest cruise operation. Booking volumes for all future sailings during second quarter of 2022 were nearly double the booking volumes during the first quarter of 2022. So that is the biggest positive from this earnings report, and the stock is currently up by more than 9.95%. So that's almost 10% is up at this moment. Okay. Anything else? Let me quickly check if there are any other updates. The company repaid $0.2 billion of debt principal over the last quarter. So that's pretty good in terms of also cash from operations turned positive in April and was positive for the second quarter of 2022. That's right. Okay. So these are the two earning numbers. other stocks that we'd probably look into. But first, let's go back to the market, what's happening there. And we'll start with quickly the market update. As you know, the major highlight of the news today, the Supreme Court ruling overturns Roe versus Wade in a recent judgment. That's a more than a 5-decade-old judgment the Supreme Court has overturned. So that has caused major news all over the country. Okay, in terms of the market, S&P 500 is up by almost 100 points today, 93 points, currently up by 2.46%. So that's a major gain. And with that particular, we'll try to analyze that with respect to Bollinger Band as well. Let's quickly have a look at the Bollinger Band. As you can see, the Bollinger Band was at the S&P 500 was at the lowest here last week. It touched the lower band, and then it is now going back to the center of the band. So it's going to the center, and then probably we have to see whether it touches, and then whether it retraces from there, or it crosses towards the higher or the upper band. So that is probably we have to see. And as we have mentioned a few times that in the last few weeks, that most probably it will be operating within a range. So within this range of between, let's say, 4,200 or 4,300 to this level of 3,700, 3,600. This time it fell a little bit more. It fell, the lowest was, I think, 3,636. But yes, that would be kind of an operating range that we are expecting. NASDAQ is up by 283 points, 2.52%. Dow is up by almost 700 points, 666 points. So for last 4 trading days, the market has consistently gained, and it's almost more than 5% now, almost 6%, so to say. So let's see how other things are behaving. Also, we discussed about one position yesterday, I think. So probably we need to get rid of that position. Let me see whether that trade was filled or not. SPX July 4,020. So probably we'll just close that position. We'll just at this moment we'll close that position at a loss because it's probably not in the direction that we expected. $6.50. Okay. We don't want to increase the risk on that anymore. So I'll just close that 650. Okay, let's see. We opened the position at $2.97. So probably it is better to close that position at this stage. I'll switch off my video so that you can see the full screen. Okay, let's move on to what's happening in the other marketplace. Okay. Dollar index is down by 0.2%, and VIX volatility index is down by 7.3%. So it is back to that level of around 25, 26. It has been oscillating between this 34 and let's say 24 or something like that. So that's the range currently, and that's what we expect. Gold is up by 0.4%, silver is up by 1.36%, and oil is once again up by 3.2%. Bitcoin is marginally down, more or less flat, you can say. Ethereum is up by 6%. Meanwhile, the stocks in our watch list, most of them are in positive territory. So that is better. Advanced auto parts up by 2.2%. Apple is up by 1.5%. And Accenture is up by almost 4%, 3.93%. And yesterday it had got good earnings report. Applied Materials is up by 3.8%. Ambarella is up by 5%. AMD is up by 5%. Amazon is up by 2.7%. Arista Networks is up by 4%. So more or less, the stocks all are in positive territory. Activision is up by 1.1%. Bumble is up by 4%. Citigroup is up by 3.3%. Salesforce is up by 6.7%. That's fantastic. Dell is up by 2.4%. Disney is up by 3.5%. DocuSign is up by 6%. So as of this week, the market is definitely positive. Google is up by 3.9%. And yeah, so Netflix is up by 5%. So most of the stocks in our watch list are in positive and significant gains. Oracle is up by 3.4%. Pinterest is up by 6.4%. Right. Microsoft is up by 2.3%. And Target is up by 2.3%. Okay, let's go back to some other specific stocks as well. One of my favorite is Fedex. Fedex is up by 6.6% today after it expected the adjusted earnings to rise in its current fiscal year. Fedex reported mixed results for its fiscal fourth quarter. So okay, so there was an earnings report yesterday. Let's quickly go through the details of the report. Fedex reported fourth quarter, May 2022, earnings of $6.87 per share on revenue of $24.4 billion, whereas the expectation was $6.91 per share on revenue of $24.6 billion. So it's almost, same as the expectation. Revenue grew 8.1% year on year. The company said it expects fiscal 2023 earnings of $22.50 to $24.50 per share. The current expectation was $22.57 per share for the year ending 31st May 2023. Fedex, some other results. Operating margin, GAAP operating margin is 7.9%, and non-GAAP is 9.2%. As against in 2021, GAAP operating margin was 8% and non-GAAP was 8.7%. Okay. Stock is currently up by more than 6.7%. The other stock that is in news is Zendesk. Zendesk is up by 28% today after the company announced a buyout deal with a group of private equity firms, including Hellman and Friedman and Permira. The all-cash deal values Zendesk at about $10.2 billion. Okay. How much is the market cap? Is $9.13 billion as of today. So there may be a little bit more up, upside there. Microsoft is up by 2.36%. Citigroup named it as a top pick and said the sell-off in software stocks is mostly done. It's good to know. Bosch health companies is up by 19% today. The only major news is that Joseph Papa has resigned from its board of directors. Papa is being replaced by investor John Paulson, will serve as the chairperson of the board. So I'm not sure whether that particular news drove this upside, or there may be some other changes as well. Okay. Lending Tree is down by 9%. They lowered their second quarter guidance. The company now expects revenue between $259 million to $264 million, down from range of $283 million to $293 million previously. The other company, probably Wolfspeed, like to discuss, is up by 12.4% after Goldman Sachs upgraded it to buy from neutral. There's another company, Iron Mountain, IRM, is up by more than 3% today after Barclays initiated coverage of Iron Mountain with an overweight rating. Okay. The other company that is in radar is Wells Fargo. Is up by more than 7% today after Federal Reserve said Wells Fargo, among other large banks, passed the central bank's annual stress test. The central bank said Wells Fargo has maintained strong capital levels to weather a severe recession. Wells Fargo did not see growth in its stress capital buffer, unlike some of its peers. Okay, so that's the news specifically. Let me see if there are any more news in the market other than we have already discussed. And let's go back to the index now. S&P 500 is up by 95 points. So more or less it's the same. And Nasdaq is up by 288 points. Dow is up by 687 points. So in terms of weekly chart, let's make it weekly. So after again 3 weeks of loss, so this week it is a gain. So 2 weeks of loss, you can say, and then this week is a major gain there. So this week it has gained 5.9%. The previous week was a loss of 5.8%, and prior to that it was loss of 5.06%. So this week is a gain of 5.92%. Okay, so that's the status as of now. Friday afternoon, let's see what has happened to our order. I'm not taking any other new position today, so that has closed at a loss. 4,020 call option for 1st of July, sorry, 14th of July. 14th of July, right? So the position that we took yesterday, but other than that, other positions are intact in terms of our stocks. and options, the bull put options. So we'll continue with them. Most of them are in positive except Meta. We'll see how it looks for Meta quickly. Facebook Meta is currently at 168. So our bull put position is 170, 165. So should be all right. Let's see. Hopefully it will be all right. So all our bull put positions are intact. So hopefully they will all they will close at a profitable trade. We'll have a quick look in next week as well, and then I'll summarize their position. So thanks a lot for joining in today. If you liked our video, please do subscribe to our channel and also follow our social media channels in Twitter, Facebook, and LinkedIn. Thanks a lot for joining today, and enjoy the rest of the day and the weekend, and we'll come back on Monday. Thanks a lot for joining, and see you again on the Watch.